Welcome to another episode of Millennial Investing Explained. Here's today's question. Let's dive a little deeper into what an ETF is. Basically, what an ETF is that it allows you to buy ownership in many different companies. So for example, if you buy an S&P 500 ETF, you're buying an index fund which tracks the largest 500 companies in the US. And as a result, because you bought that ETF, you now have a small ownership stake in each of those 500 companies. You're not just buying one company, you're getting a diversified basket of stocks like Apple, Microsoft, and Facebook. When you buy that ETF, you're essentially buying an instrument that owns all of these 500 companies. And by owning that, you get a small percentage ownership of all the companies that that financial instrument owns. You can buy ETFs that cover large indexes like the S&P 500, but it doesn't have to be. Because ETFs have become so popular, you can buy ETFs on almost anything you want, almost any sector or industry, and they still allow you to buy a basket of stocks within that specific sector or industry. For example, you could buy a specific tech or retail ETF that would cover many stocks in those different areas. You might be wondering where ETFs came from. Well, years ago, mutual funds were all of the rage. Everybody was investing in mutual funds. That was the best way to diversify and get great returns. But then ETFs were created to disrupt that mutual fund industry by providing a lower cost product and better tax advantages. That being said, mutual funds are still around today and they're still very popular, but ETFs have gained a lot of popularity and have been growing rapidly over the last decade or two. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.